Hello and welcome to another update video about XRP. The price remains caught in a sideways correction. In this video I just want to focus on the shorter time frame. I don't assume that there will be too much price action on the weekend. I just want to remind you of the key levels and what I'm watching for. It is important that we talked about the daily chart and the larger time frame on this channel before, and it's important to understand that the price remains caught in a broader sideways range. So there are key support levels on that we see on the daily time frame, but you see the larger support box here as well, with main support down there at $1.20. So that is the main support level for our larger range that the price is moving in. But at the same time, it is possible that within this range, a low formed already on the 3rd of February. Yeah, this is here, okay? So when the price bottomed here, we had a nice reaction. However, as I mentioned in previous updates, that reaction to the upside was not a 5-wave pattern. And because of that, I could already tell you back then, already early in February, that it is not clearly bullish. That I'm, however, very closely going to watch for the structure of this decline to judge whether there is a chance for continuation to the upside or not. And yes, there was a chance. Actually, it was what I was watching for primarily because the pullback was, as we call it, corrective. So it remained in 3 waves. As you can see there, we have an A wave down, a B wave up, and a C wave down. So it is a 3-wave move to the downside. However, 3 waves up and 3 waves down don't really tell us that the trend is clearly up. That would require a 5-wave move up and a 3-wave move down. And we haven't really seen that, okay? So because of that, however, because of the 3-wave move down, we relied more on Fibonacci support levels. And I gave you the $1.95 level for this thesis, for this idea that a correction finished in February. And that key level is at $1.95, and the price is still holding above that level. So that's an absolute key level because the $1.95 level is basically the last reliable support level for such a wave 2 pullback. Yeah? So if we assume that on the 3rd of February, a larger degree 4th wave bottomed, then this would now be wave 1, wave 2 of the larger wave 5, and we've actually started wave 3. But it's getting super choppy. If you know a little bit about Elliott wave, then you will know that a 3rd wave is typically the most aggressive rally in a cycle. I don't really see that at this stage. It is not very, very aggressive. And because it's not very aggressive, it's not very clear if we really are in a 3rd wave. And then on top of that, it looks very, very choppy. So you have this rally, you have this pullback. That's not a surprise, given that we are dealing with 3-wave structures. As per Elliott wave rules, if the wave 1 is a 3-wave move, the 3rd wave is a 3-wave move as well. And it would be an A, B, C structure. That makes interpretation very challenging because a 3-wave move is a corrective pattern, and there are just many, many corrective patterns in Elliott wave. So all I can share with you at the moment is that as long as we're holding that last low at $1.95, it is possible that the yellow scenario is playing out. This would be key support, which will help us distinguish between bullish and bearish momentum. Bullish momentum, follow through to the upside. Bearish momentum, decline. Yeah? A drop into the lower support area, 195. I've got an additional support area here between $2.14 and $2.30, but this is for me a weak support area. I would not rely on it. Yes, the price reacted to it already on the 4th of March. Yes, we saw a rally, but we did not see any break above a previous swing high or one of these key levels, for example, $2.72 or $3.04 as basically next critical breakout points to the upside. That hasn't happened, and therefore I remain cautious and assume we are range bound, but still will pay attention to these levels, but I do not see a high probability upside setup or anything, right? This was decent, this 1-2 setup. There was a good reward to risk ratio down there, and clearly it played out. The market rallied nicely from there, and it rallied from the support area around about 50%, but it's not really any follow through that we see. So next evidence that a low is in place would be a break above that critical $3.04 level. In the first instance, a break above $2.65 is needed. That's the update about XRP. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.